Hey, what's happening, everybody? It's your boy, Chicago Sean. No longer Chicago Sean. I got to keep saying that. Got to stop saying that. Options Sean on Twitter. Today is August 1st, 2024. It's a new month. It's a new day. The markets are going crazy today. Well, at least if you're a NASDAQ trader, right? If you're watching the NASDAQ, whoo, boy, bunch of action going on there. This is the All-Star Options Jam session. So what we do here is we talk about what's happening with some of the trades that we have on. We update you on some stops that we need to adjust, hopefully to lock in some profits. We discuss, some new trades we may have put on since we last spoke. And of course, we started all off with kind of a broad overview of what's going on in the market, at least through my eyes. But before we get to any of that, let's drop the old disclaimer here. Everything that we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you are learning something along the way. All right, so let's do this. Let's bring up the chart. Let's look at the cues. This is where the carnage is really happening right now. The Nasdaq trading just off the lows right now, made a recent low just a little while ago, a few minutes ago. But this is a big engulfing red candle getting rejected at the 50-day moving average. What does this mean? Who knows? Who knows? But it's been an interesting day in tech land, and you can see in the volatility index, VIX, we are not spiking, but we are going back towards the highs that we saw last week. So it's telling us that there's a little bit of fear out there. Earnings season is maybe not going as well as everybody had hoped. I mean, we saw a good report out of Meta, right? We saw some other good reports, but I don't know. The fear is at levels that, while not, not red alert, not sell everything signal, nothing like that, but certainly at elevated levels, it has our attention. And so this is the type of market where we got to be careful, right? And a good market for an options trader like me to maybe start dipping our toes into selling some delta neutral options premium here with elevated premiums. It could be a good time to do that. We'll get to that in a minute. But let's talk about positions that we've exited since we last spoke. Let me go over here. Recently closed positions in no particular order. Here's Reddit. Boy, I was feeling really, really good about this trade when we got into this back on July or June 1st. I really thought, especially the following day, we had a great follow through. And then over here, the middle of July, I was pinging my boy Steve Straza saying, I'm really excited about this Reddit. Maybe I should add to it. I didn't add to it. And thankfully I didn't, because boy, this thing rolled over and it stopped below. We had our trigger on the 25th. It closed below our level on the 25th, and we exited the next day on the 26th. All in, it wasn't a terrible loss. We paid $6 for this bull call spread. We were in a October 70-100 bull call spread. We paid $6 for it. We got out for 508. So all things considered, a very small loss. Not without its excitement, though. Wow, I was really feeling like this was a good trade. I'm going to keep an eye on this one because it might set up again too. I mean, if this level here holds, this might set up again, and definitely a stock I want to be owning. One of those recent IPOs that when it makes those first highs following the IPO period, sometimes that's where a big run can emerge from. So keeping an eye on Reddit. All right, next up, ADI. Now, this is a good news, bad news. It's a bad news because we got stopped out, but good news is that this was a winner, and it was a very nice winner. We got into December 240 calls back in early May. We paid $7 for them. As was our plan going in, we wanted to sell half of our position when they doubled. It did so on May 22nd following an earnings release. We sold half of our position at 14. Turned out to be a good idea because for the next 2 months, it just kind of churned sideways, didn't really go anywhere. I thought we were going to start a next leg here in middle of July, but the market quickly had other ideas for us. Our adjusted stop loss level was at 224. We closed below it on the 25th. On 25th. And so we exited the trade the next day. And that was the other half of our existing position. We sold that other half for 11.15. So all in, we bought it at 7, sold half of it at 14, the other half at 11. It's a winning trade. We'll chalk it up as a win. We'll gladly take it. Could have been a lot more, but hey, still a very nice win. We're out of ADI, that's analog devices. Next up, Oxy. This was a trade that was looking good for us for a little while. We bought the September 65 calls for $1.40. We had a little bit of volatility in the first couple of days, but our patience was being rewarded for a little while. Unfortunately, we stopped below our adjusted stop loss level just a few days ago. We got out of these calls for 68 cents. So we paid $1.40 on the way in, got out for 68 cents. Not a terrible loss. Remember, guys, whenever I'm buying, especially a simple position like a long calls position, I'm always sizing my position in a way that I'll never lose more than 2% of my trading capital on any one trade. Often I'll even go even less, so I'll keep it closer to 1%. So think about that. If I lose 100% of my capital in the trade, so if I paid $1.40 for this trade and the thing goes to zero, I get out for nothing, right? Well, worst case scenario is it's a 2% hit to my portfolio. I don't like 2% hits to my portfolio. Nobody does, but we can come back from that, right? That's the name of the game in trading. You want to have losses that you can come back from. We're going to have losses. In fact, we're going to have a lot of losses. Most of the successful traders I know lose more often than they win, but their losses are small and their winners are large, and that's how the game is played. So that's it for the positions that we've exited in the last week. Let's review some updated stops. We had an opportunity to update some stops on some positions, which I'm feeling pretty good about considering the way the market's been trading today in no particular order. Actually, XLK is not an updated stop. Excuse me. Let's start with GE. GE is we're long a kind of a what do we do? We were long the December 170 calls. We sold some premium around it to kind of lower our cost. We're in for a net debit of 932. But that's not what's important here. What's important here is we've moved up our stop to 156. Our previous stop was below this low on June 14th. We're now moving it up a couple of bucks to where this more recent support is. So 156 is the new stop loss level in GE. Any close below 156 is my signal to get out of the trade. Next up, Berkshire Hathaway, BRK/ or .B, depending on your trading platform. We are in a September bullish risk reversal. We got in during this pullback here. It's not necessarily not working for us, but it's not working either. It's just kind of trading sideways. Considering the market we've been in the last couple of days, I like the way Berkshire's hanging in here. But we are moving up our stop now to 418. Our stop was about 415, I think, below. Are moving up our stop to 418, which in this case corresponds with some upside resistance for the early part of the spring. Also the rising 50-day moving average. Both of those levels kind of converging at 418. So that feels like a good place that we don't want to see Berkshire get back below 418. If that's the case, I don't like our trade so much anymore. So I'll look for an exit at that point. All right, XLE, this is a leap trade. We've got till December 2026 for this trade to play out. We're hopefully in this one for the long haul. Although we're getting, we're getting some choppy action here, especially today. I don't like this red candle happening in XLE today, but we are moving up our stop to 89. If XLE trades back below 89, then this leap that we're in, we are going to get out. Again, we're in this trade for the long haul, hopefully, but risk management is job number one. If it's below 89, I don't think we like this trade anymore. All right, eBay. Wow. Great earnings result today. In spite of the market today, in spite of tech stocks getting hit today, eBay is trading very strong, up over 3% of the day, and holding on to those gains, most importantly. We are in a October 55-65 bull call spread that we paid $250 for. Right now, it's looking pretty good. We are moving our stop up to 53. 53 corresponds with the upside resistance here this spring. It's, I might even next week, we probably might even move it a little higher up above this 50-day moving average. But for now, 53, as long as eBay can stay above 53, we're good there. All right, Caterpillar, this is a risk reversal or protected risk reversal. We've got defined risk. We sold a put spread instead of just a naked put. Not liking the candle here in CAT either. We are moving our stop up to 320 from, I believe it was around 315. moving it up to 320. Any trading below or any close below 320 will get us out of Caterpillar. Hopefully this big ugly red candle can hold and not do any further damage from there. Next up, Morgan Stanley. Morgan Stanley removing our stop up to 100. I like this consolidation here. I'd like to see this area hold. But for now, the stop will be 100. Eventually, hopefully, if we break higher out of this consolidation here, then we'll soon move our stop up to probably around 101.50, right below the low of this muck area here. But for now, Morgan Stanley, our stop is at 100. And lastly, on the stops, Tesla. Tesla, boy, took us a little while to get this thing going, right? We got in early May. It mucked around. We weren't proven wrong. Our stops weren't hit, but it wasn't really working for us. Finally, we got the move we were looking for. June 26th really is the big breakout day. Had a nice, really, really nice run. I think we had something like 13 straight up days, which was pretty nice. We've given some back here, which is concerning. I'm not terribly worried about this trade right now. But I am moving up my stop to 208. 208, I mean, look, we don't want to be below 208 because if we get any much further below 208, we will be both below the 50-day moving average and perhaps below the 200-day moving average. Certainly not where I'd like to be in positions that I'm bullish in. We may move our stop up again above this, right below this consolidation level around 215 in the coming weeks. But for now, 208 is our stop. Any close below 208 gets us out of our Tesla bull call spread. All right, that's it with all of our updated stops. Let's hope the market finds its footing here. All these are bullish trades, obviously. So hopefully the market finds its footing and we resume higher from here. And these new stops, yeah, we keep moving them up. Let's review some new trades we've put on since we last spoke. We just have two at the moment. RSG, this is a waste management type company. They do garbage. And I in the blog post where I put this trade out, I said, trash is cash. So there was a bad reaction to its earnings right here, this big red candle. We feel like that was a fade. We wanted to fade that move. We like the stock. It's been in a very strong uptrend, one of the leaders in the space. We got in here on June or July 26th. We're looking like geniuses at the moment. It's too early to tell. But if you want the trade details for this trade and for any of our new trades, please go to allstarcharts.com, go to the options section. I'm sorry, go to the members section, then go to the options section, and you'll find detailed trading plans for every one of these trades, why we like the setup, how we're playing it, what option strategy we're using, where our stop outs are, where we may or may not take profits. All those details are spelled out for you. You got them right there for you. You put the trade on, you got everything you need to manage it going forward. If you don't have access to that, shoot us an email. Let us know. We'll get you involved. But RSG is a bullish trade we put on recently. And next up is Amazon. We are bullish Amazon heading into earnings. They've got earnings today, I believe, after the close. We know that they have earnings. It's okay. You know, sometimes people don't like to put trades on ahead of earnings. Sometimes I don't like to put trades on ahead of earnings. But Amazon is one of those names that we feel pretty confident that we're not going to get crushed here. But we put a bullish trade on in Amazon. Again, head to allstarcharts.com for the trade details. All right, everybody. I'd like to put this up here. I know a lot of people ask for it. This is just the updated stops that we reviewed. If you need to take a screenshot, do so. These are all of our updated stops. And in the meantime, if you have any questions at all, whether you want to get involved in All-Star Options or if you have questions to me about any of the trades we've got on, shoot us an email, info@allstarcharts.com. And hey, do you like the charts I've been sharing here? My friends at TrendSpider have hooked up me, hooked up you with a discount. If you want to try them out, go to trendspider.com. Use this promo code Sean50. That's me. Hey, that's me. I'm almost 50 years old too. Did they do that on purpose? I don't know. But use promo code Sean50 and my friends at TrendSpider will give you 50% off a subscription plan at TrendSpider. Check it out. I've been using the charts now for the better part of this year and I really like them. And I think you will too. All right. I don't see any questions in the chat. So I hope you guys are having a great day. I hope you're doing all right with this market volatility. Maybe you got some short positions on that are working for you. I do. That's helping me feel a little better about today. But hang in there. The weekend's almost here. Until then, I'll talk to you next week. Take care, everybody.